Mike's employer makes compulsory superannuation contributions to Mike's super fund. These amounts are deemed concessional contributions. They are assessable income to the fund and are taxed at concessional rates, with the net contribution added to the fund balance. Mike also makes an after-tax contribution to his super fund and does not elect to claim a tax deduction for the payment. This amount is deemed a non-concessional contribution. No tax is payable by the super fund and the full contribution is added to the fund balance. For taxable funds, superannuation is taxable at 3 stages: entry, earning and exit. Entry refers to when contributions are made to the superannuation fund. These contributions can come from many sources, including employers, individuals, their spouses and the government. 2 main types of classifications are concessional contributions and non-concessional contributions. Concessional contributions are deductible to the payer and are assessable income to the super fund, but generally taxed at concessional rates. Concessional contributions are typically made in 2 ways. Firstly, by the employer. This can take the form of compulsory superannuation contributions, in line with legislated rates of the employee's salary and subject to minimum and maximum salary amounts. Any additional contributions required from an industrial agreement, award or negotiated remuneration package, or via a salary sacrifice arrangement, where the employee reduces their salary and increases superannuation contributions within their existing remuneration package. Secondly, by the member. Here, the member needs to notify the super fund trustee that the amount is a concessional contribution. The result is that the member claims a tax deduction for the contribution and the super fund treats the contributions as assessable income. However, the amount of concessional contributions that can be made in a tax year is capped, and concessional contributions that exceed the cap are penalised. Taxation of concessional contributions may be adjusted for low-income earners and high-income earners. Low-income taxpayers may be eligible for the low-income superannuation tax offset. The LISTO effectively refunds the tax paid on the taxpayer's concessional contributions up to a maximum amount. High-income earners may be penalised with a higher tax rate on their contributions. This surcharge applies once their aggregated income amount exceeds the relevant threshold in a given tax year. Non-concessional contributions are not deductible to the payer and so are not assessable to the superannuation fund. Non-concessional contributions are generally paid by taxpayers from after-tax funds and only once their annual concessional contributions cap has been reached. However, even non-concessional contributions have an annual cap, subject to certain bring-forward provisions that may apply to certain taxpayers. Non-concessional payments in excess of the cap are effectively taxed at the top marginal rate. In addition to the annual non-concessional contributions cap, it's important to be aware of the superannuation balance cap, above which no further non-concessional contributions can be made, and the lifetime capital gains tax cap, which relates to contributions that have utilised certain small business CGT concessions. Non-concessional contributions can also be made by the government under the co-contribution scheme for lower income earners. Certain eligibility criteria must be met, and the co-contribution also has a maximum entitlement that tapers depending on the taxpayer's adjusted income and the amount they personally contributed. In addition to the taxpayer and the government, non-concessional contributions can be made to a spouse's superannuation fund. In this situation, the contributor receives a spouse contribution offset. Again, certain eligibility criteria exists, and the offset also has a maximum amount that tapers depending on the recipient spouse's adjusted income. To recap, contributions can come from many sources, including employers, individuals, their spouses, and the government. 2 main types of contributions are concessional contributions and non-concessional contributions. Concessional contributions are deductible to the payer and are assessable income to the superannuation fund, but generally taxed at concessional rates. Non-concessional contributions are not deductible to the payer, and so are not assessable to the superannuation fund. A range of rules and regulations apply to contributions, including concessions, caps, penalties and offsets. And it is important to be aware of all facets to ensure the most effective superannuation contribution strategy is employed.